In this presentation, we will record the transaction related to the payment of employees within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars file. Note that as we've mentioned in the past, there's going to be different options for payroll. Payroll is going to be something that we're going to have to pay for separately, either doing that within the QuickBooks system where there are a few tiers that we can use to process the payroll to pay for some different functionality or some different settings or different options within QuickBooks, or we can pay someone outside to process payroll and then enter that data into the system. If we're going to enter data within the QuickBooks settings, we would go to the Workers tab. Go into Workers, we have set up our two workers, Adam and Erica, although we don't have the paid payroll set up at this time. We may go into some more detail about the paid version of payroll in future presentations, but that's really a course in and of itself, or it could be. So we might get into more detail at a later time with the paid version. We do, however, want to include payroll in our practice problem, payroll being a big expense if we do have the payroll as one of our expenses. We're going to work this, one, by using the QuickBooks desktop version just to show what the data input screens would look like. The desktop version has a pre-payroll or a manual payroll so that we can see what the data input looks like. It's actually really good for learning because we have to put in the types of withholdings rather than have the system calculate them. As we do so, we get a better understanding of what QuickBooks is doing for us. We'll also take the perspective of having a third party that would be doing the payroll for us if that was an option we were going through. Again, thinking about how the payroll would be put into place by a third party, how they would process payroll, what is payroll, how do you calculate payroll and the withholdings related to it. Then thinking about that report that we would get from the third party, how would we put that into our system? If they did the payroll, how are we going to take that net payroll that they have done and put it into our bookkeeping system? That's what we'll take a look at now. This is the desktop version of QuickBooks. It's going to look a lot different in the look and feel of it, but the functionality will be much the same, and that the actual payroll data input will be much the same. We're going to go down here to the Pay Payroll, Pay Employees. Once again, this is the desktop version, but we're going through the process and taking a look at how to enter this data and what it would look like, what would the data input fields look like as we enter data for payroll into an accounting system. What we would do up top is select the date ranges. There are two dates that are important. We've got the period end, the payroll period end, which is 01/31/19, the end of January, and when we're actually going to pay. If it was the same day, 01/31/19, we would have the same day. Oftentimes they are not, however. Oftentimes we'll have the payroll period end, say at the end of the month, but the payment doesn't happen until some future date. So these two may not be the same. Then we're going to have our check number down here. This is going to be the check numbers that will be written as we process these checks. Then we have our two employees, same employees that we have in our payroll system. We've got Adam Hamilton and Erica. If we select one of them, then we're going to see the data input screen. So this is where we would actually input the data. Now note that QuickBooks will basically input this data for us based on the data that we have entered into the system. So for example, Adam, we're saying, is a salaried employee. Therefore, the salary pay will be the same each payroll period. After we have this set up, it should be fairly easy to process the payroll. That should be easy to do. If there's any problems with the payroll, it usually comes around either when we do the quarterly reports and or the yearly reports, the 941s, the 940s, the W-2s, and the W-3s. If there is a problem, if something's going funny, then we may not pick it up because it'll just repeat until we do those quarterly reports, which are kind of like the summary reports. Then we would enter the data down here. We've got the salary information. Now this would populate. These are going to be the withholdings. These would typically populate by the system. They are not here because this is the manual system. We would have to actually calculate these. These are the items that we really want help with one way or the other. Even with two employees, it's very tedious to figure out, especially the federal income tax. It's not too hard to figure out the Medicare and the Social Security. Federal income tax is difficult. If we want to add more benefits, such as a 401k plan or some type of retirement plan or health insurance, then these get much more difficult, much more tedious as we go. We're going to go now and take a look at a check that has been written. We're going to close this back out, close this back out, and we're going to go to the banking up top, use the register, and we're going to go to our checking account, and we'll look for these payroll checks. So here's Adam, here's Erica. These are two payroll checks indicated by a special check. Once again, it's a pay check, still just a check, but it's a payroll check, which QuickBooks uses a different form for, indicates for us, which is nice. We'll select that item and we'll get the data for that check. Note the net check amount, $628.80. If we look at the paycheck detail then, we see that similar data input screen. This is a salaried employee. So we had the $20 rate times the 40 hours, that's the $800. That's what was earned, that's gross pay, but only $628 was paid. That's the only amount that came out of our checking account that we then gave to the employee. They earned $800. We took from them federal income tax, Social Security, and Medicare, as is our requirement by the government to do so, gave them the net check. Not only that, but we also had to pay Social Security and Medicare, and if there was any federal unemployment, on top of that. These are our payroll taxes that we pay. So typically this is the information that QuickBooks will do for us. But if we have no understanding of this information, and we're just completely dependent on QuickBooks, it's probably the case that we want to get some help. We want to get more support by QuickBooks possibly, or someone to help with payroll. And so payroll is something you probably want to get some advice on, even if you only have a couple employees, because if it starts to get messed up, it can be a messy situation. So keep that in mind. We'll go through the concepts now as we work this through now in Excel, just to get a concept of the payroll settings. And we'll look at a report then that we might get similar to a third party doing the payroll. If a third party did the payroll, they would still have to, or we would still have to get that information into QuickBooks somehow. So what if a third party did the payroll? How would we then get that information into our QuickBooks system? That's how we'll think about this problem now. Here's just a little worksheet for our two employees. We got Adam and Erica, and we're just going to think about how would we calculate the payroll, and then think about the report we would get from a third party, such as ADP or QuickBooks, that processes our payroll for us, how we would take that report, enter that information into QuickBooks. If we had our two employees, we'd say Adam, we're going to say that we pay Adam, a salaried employee, so we pay him the same amount each month, and that's going to be, we use a formula here, equal to $55,000 a year. So we usually think about it a year, and then we're going to divide that by 12. We're going to say that we pay Adam every month. We're going to run payroll every month. So we pay payroll every month, divide that by 12. Therefore, Adam would get $4,583.33 per month. Then we're going to say, okay, Social Security is going to have to be taken away from Adam. He's not going to get a check for $4,583.33. He's going to have to pay Social Security as everybody does. So the Social Security then is generally easy to calculate. It's 6.2% currently. So it's going to be a flat tax, in other words, although there's a cap to it. So there is kind of some complication for it, but it's fairly easy compared to the federal income tax. To do it, we're just going to say this equals the earnings times 6.2 or 0.062. So there's that. We're going to say it's 284.17. Notice the system is rounding for us. So it's doing some rounding to do these calculations. Now we're actually going to change that number to give the data that's going to be given in this problem. So the data given in this problem isn't 6.2%. We're going to keep in alignment with the data. So just work with us there. It's going to be 258 is the number that we're actually going to use because that's what's given in our problem. The Medicare will typically be 1.45%. So let's see if that one ties out. It should be once again a flat tax, the gross pay times 0.0145. 0.0145 should be 66. Our problem is using just 66, so it's rounding it. So we're going to just keep it at 66. And then the income tax, the federal income tax, is one that we just can't calculate based on this number. It's not a flat rate. There's no rate we can use. It's a progressive tax system. It depends on the number of exemptions. It's a complicated thing. We need tables. We won't get into how to do that. This is the one we need the most help with, the one that we're completely reliant on software for, or an independent party or a payroll professional to really help us out with typically. Although we can look at it in the table, we can do that, but we won't go through that process here. We're usually going to get this from the system, from QuickBooks. We're going to say here it's 720. So the net check then is going to be the total earnings minus Social Security, minus Medicare, minus the income tax. We're going to do that with a formula, equals total earnings minus the Social Security, minus the Medicare, minus the income tax, and enter. Now, even if you don't do this calculation, it's useful to see because we'll have to enter this information then into QuickBooks somehow. And the better we understand this, the better we understand payroll. The better we understand payroll, the happier we can explain this to our employees and hopefully make them happy and understand what we're going through with the payroll. So then we're going to go with the Erica. We're going to say that Erica is going to get paid $800. So $800 is what Erica is going to get paid for the month. And we'll say Social Security. I'll do the same calculation and then adjust it if it's not exact based on our problem. Usually it's going to be based on the total earnings times 0.062, 6.2%, and 49. And we're going to use just 49, a flat rate of 49. So I'll round it to just 49. And then, because that's what our problem uses. And then Medicare is usually the total earnings times 0.0145. Enter. We're just going to use 11. So it's going to round it to just 11 for our problems purposes. And then again, the tax is going to be 110 federal income tax. Can't really derive that from this number. Too complicated. We'd have to use tables. We do in practice, but we need the W-4 information, the exemptions, marital status, and then tables to do so. Net check then for Erica, 800 minus the 49 minus the 11 minus the 110. So we get 650. So earnings, Adam, 4,583. That's what they earned. They're only going to get 3,539. This is their tax, not our tax. This is Adam's tax that we had to take from them and pay for Adam based on the law. That's just what we have to do. And then we've got Erica earned this, but only gets that. And this is Erica's tax that she pays, she owes. We force her to pay by taking it from Erica before she sees the money at all. On top of that, we're going to have our taxes that we have to pay, kind of like a matching tax. And that's just going to be equivalent. So we're going to say it's going to be the same Social Security that we're going to have to pay as the employer over and above the gross pay. And then the Medicare is the same. So this is just a short example. We could have state taxes and we won't get into federal unemployment. And the same for Erica. So we're going to match Social Security and Medicare. So this is kind of this is like a report. This is a really basic type of report we might get from a third party that then is saying, hey, we wrote a check out of your account for these amounts, but this is really the detail of the report. How would we put this into our system? If we just put the net check in there, it's not really right because really there's Social Security and Medicare, and there's also a check related to our payment for taxes. How would we put this into the system? Well, typically we're going to think about it in journal entries here, and then we'll put it into the system with basically the checking account. So we can think about this as first, the two employees. We have Adam, so we're going to start with Adam and look at the payroll check. We know what happened to the checking account. The checking account went down by $3,539. That's going to be a credit for us if we think about this in terms of debits and credits. So it's going to be a negative of this number. So it went down by that. And we know the expense, however, this is what Adam actually earned. That's the gross pay. So we know the gross pay is really this. That's what was really earned. And the difference then is what we took from Adam, these items. That's what we took. It's a liability that we owe because we don't get to keep it. We got to pay the government. The government's forcing us to do their dirty work, take the money from the employees and then pay them for it. So we're going to say this is the difference, negative sum of these three, and enter. So that's going to be our journal entry. So expenses go up, checking account goes down, liability is the difference. The checking account will eventually go down by these liabilities, but not until we actually pay them. So, and of course, if you sum these up, it adds up to zero. So in other words, the debits equal the credits. Erica's the same way. Erica earned the gross pay. Erica's going to be taken out of her paycheck, however. There's going to be a credit, the net pay. The difference is her taxes that she owes, which we had to take from her and force her to pay due to the government making us play that role. So we're going to say negative sum of these items is what we took from Erica. We don't get to keep it, therefore it's a liability that we're going to have to pay the government for. If we add those up, 800. So you can think about this as two separate journal entries, two separate checks, or you can sum this up as one check. I can say the total then, the total transaction, we could enter in our system as simply one check of all this, and then the sum of these two. So, and the sum of these two. So we could consider, you can think about payroll then as the payroll in total, which is a debit to expenses of all employees, credit to whatever came out of the checking account of all employees, and the difference going to the payroll liability. Or you can think of it as different transactions for each employee, useful because this is the check that will actually be coming out of the checking account. However, this more detail is harder to enter into the accounting system. We have to enter more detail into it. So the next thing we have to do is that we're not done yet, because we also had to pay our portion of the payroll taxes on top of the employee portion. So to show that, I'm going to sum up these two numbers now. We're going to equal the sum. So here's the total pay. That now ties out here. If we copy this across, we're going to say, all right, here's the total withholdings. That adds that to this. That's the withholdings. Net pay is now this. Now we also had to match. We had to pay on top this amount, Social Security and Medicare. So we're going to add that. And again, we could add it by employee. We could say that for Erica, we owed payroll taxes of the sum. Actually, this is for Adam, for the sum of these two. And then we haven't yet paid it, so it's a liability. So it's going to go on that same payroll liability. So as our employee earns money, we owe more money just because we owe money based on what they earned. So then we're gonna do the same for Erica, sum of these two, and then the credit. And then of course the total is going to be the sum of all this. So again, we can think about this in terms of one by one. This is what we owe for our payroll taxes based on Erica's wages or Adam's wages. This is what we owe for our payroll taxes based on Erica's wages, and then the total is just what we owe in total. So now we can take this information and enter it into the system. We'll enter these two as checks, and this one we can enter as a journal entry or use a register to enter it. We'll start here, so I'm going to highlight this and I'm just going to make it green. This is the first thing we're going to enter into our system. So we'll go back to our QuickBooks and open up QuickBooks. We're just going to write a check now, so we're going to select the plus drop down up top. We're going to go to the check that we're going to write. We're going to write it to our employee, which is going to be Adam. So we're going to say Adam Hamilton. So Adam Hamilton. And add that. It's going to come out of our checking account. We're going to say that the date is 01/31/19, the end of the month. The check number should populate on its own. Entering the date is a little bit tricky. We know what the net check's going to be. We know what we actually paid. What's going to come out of our bank is that. So that's what's got to be the end check. We want to enter the expense, however, to be this. So that's the challenge. So let's go up top, and we're going to have to enter a few different accounts in order to do so. The first one's going to be payroll expense. We don't have it here because we haven't set up the payroll, so we don't have any payroll expense. They didn't give us that in the chart of accounts, so we're going to add that. The detail type will be payroll expense. We'll select that. You can just type it in there and it'll populate for us. It's going to be payroll expense, no sub account, so we're going to keep it as is and save and close. And we know that the amount in the payroll expense is going to be that 4583.33. No billable, no taxable, no customer. Next item, we're going to need another account. That's not going to be the check. The check's got to be lower than that. The other side that we're going to record this to is the liability. So we're going to record the liability. We're going to have to add that account as well, payroll liability. So not payroll expense. I'm going to say payroll liability. So hopefully I spelled that right. We'll tab over in that. It's not going to be an expense. It's going to be a liability account. So we're looking for an other current liability. So we've got other current liabilities. That's the one we want. The account's going to be the payroll tax payable. We'll keep the name up top, no sub-account. So we're going to say save and close. The amount's going to have to be a negative now. So it's going to be a negative, and that's going to be the 1044, and that'll bring us down to the 3539. That's the 3539 that we have here, the actual check. So that's going to take care of that check. We're going to select the drop down and say save and new, and we'll create another check. And now we're going to work on the second one. That's going to be for Erica. So we'll enter this information. I'll say that this has now been done. I'll make it yellow. And now we're working on this one. I'll make that the green one. That's the one we're on. Let's make it this green. So we're going to have the payroll expense, same kind of process. So we have another check, and this is going to be for Erica Robertson. There we have it, out of the checking account. Same date, check number should populate. We're going to say that now it's going to be the payroll expense once again. And tabbing over, the amount is going to be this amount, the 800 that was earned by Erica. We will then add the 800, tab, and then we're going to add another account because what was actually paid was less than that. We're going to have liabilities we had to take from that. Payroll liability. So payroll liability. And we'll give the amount for the payroll liability, which of course will be that 170. It's going to be a negative 170. So we'll say negative 170. And that'll give us the difference of the 630. That's the actual paycheck, the 630. So that looks good. We're going to say save and close. We'll say save and close. That takes care of this item. So that's been done. I'll make that yellow. Now these two, we're going to have to take care of these two items now because now we have this liability. We haven't yet paid it, so it can't be a check. We can't do it with a check. We have an expense and a liability. We could use journal entries, or we could try to use a register. If we try to use the register, we're going to use the payroll liability register because that's a balance sheet account as opposed to an income statement account. So there's only two accounts, so we should be able to use that register. We'll avoid the debits and credits by doing so. So we'll go back up top. We're going to go to the accounting on the left side, and we want to find that register for the account we just set up. It's a liability account. We're in order by account type. So we're in order by account type, and we're looking for the payroll liability account. So this is the one we want. We're going to go to the register on the right. So here we have a register, but this is a register specific to this liability account. We're going to add a new transaction, which will be a journal entry. So we're going to add a journal entry. There's no form for this transaction, so we'll have to call it a journal entry. The date will be 01/31/19. We're going to keep the number. And if we go back to our transaction, we're going to group these together. So the payroll liability, we're just going to use this 384. So the 384, which is the sum of these two. Going back to our register, it's going to be an increase to the liability. The bad thing is going to go up. So it's going to be 384. That's going to increase there. And then the other side it needs to go to is going to be the payroll expense account. So payroll expense. Now note that it's not entirely proper to use payroll expense. We might better be using payroll tax expense. The payroll tax that we pay over and above is actually the payroll tax. But oftentimes when we set up QuickBooks, even the paid QuickBooks, they group them together. And that could simplify things, although it can be a bit confusing as well. But we will continue with that system. QuickBooks is going to group the payroll taxes and the payroll expense in payroll expense. So we'll keep that. It's going to be grouped together with the payroll. So we'll say save, and there is that. Now let's go to our reports and see what happened. So we're going to go to the reports on the left side, and we're going to open up our favorite report, that being the balance sheet. So we'll go to the balance sheet report. We'll change the dates up top, those dates being 01/01/19 to 12/31/19, and run that report. On the balance sheet side, we'll see the checking account should have two checks in there, so we'll select the checking account. Scrolling down, we're going to see these checks to Adam Hamilton and Erica. Note they don't say payroll checks because we're not using the QuickBooks payroll. If we did use the QuickBooks payroll, it wouldn't name it just a check, it would call it a payroll check. But because we're not using it, it's just a normal check. We used the check in order to enter the data from a third party that gave us that information. If we select the check, then we see the normal check data input screen. It's just a bit more complicated of a check, giving a bit more detail. Note we made it a little bit more simplified because we didn't break out Social Security, Medicare, federal income tax, the type of liabilities. We grouped them all together as simply liabilities. So we're going to go back up top. And that means, of course, if we need more data for the employees on what was withheld, we gotta rely on the paycheck stub provided by the third-party vendor. We do have to provide that information to the employees. Then we're going to go back up top and we're going to go back to our forms. The other side that's going to happen here on the balance sheet is what we took from the employees that we owe. That's going to be a liability. That's going to be the payroll liability. So here we have it here. If we select that item, we go back to our payroll checks. So here's our payroll checks that increase the liability. These are the withholdings we took from them. And this is the journal entry that we made. That's the payroll taxes that we owe over and above the payroll taxes we owe on the earnings of our employees. We're going to have to pay this amount to the government, in this case to the Fed, Social Security, Medicare, and federal income tax, all being federal taxes. If we scroll back up top, that's going to be on the balance sheet side. Now let's take a look at the income statement side, or the profit and loss side. To do that, we'll open up a new tab by right-clicking on this tab and go to Duplicate. I'm going to pull this tab to the right so that the balance sheet is labeled balance sheet, and then we'll go to the reports down below. We're going to go to our other favorite report, the income statement or profit and loss. Change that date range up top to 01/01/19, 12/31/19, and run that report. And then we're going to scroll down and we're looking for that payroll expense. There it is. There's payroll expense. If we select it, we're going to find the detail. We'll see those two checks and we'll see this journal entry that we made for the expense, which we have not yet paid. So those are going to be our transactions. These checks, it's nice to group them in this format because as they go to our checking account, we should see them actually leave the bank in that same format, and we should be able to check them off as we reconcile the checking account. For more accounting information and accounting courses, visit our website at accountinginstruction.info.